Next up, we have Alex Passmore, Managing Director of Rox Resources. Rox's flagship project is the high-grade U&Me asset, which has a resource of 3.2 million ounces at 3.6 gram per tonnes gold. There is plenty of resource development drilling ahead, regional exploration and study work, which suggests plenty of share price catalysts ahead. Please join me in welcoming Alex Passmore, Managing Director of Rox.
Good afternoon. Thank you, Digby. And it's a pleasure to be presenting on Rox at Diggers and Dealers once again. So Rox's flagship U&Me gold project is around 150 kilometres southeast of Mount Magnet in Western Australia. And our second project, Mount Fisher gold project, is around 150 kilometres southeast of Jundee, up in the Mount Fisher Greenstone Belt. At U&Me, we have a 3.2 million ounce resource, but importantly, a high-grade underground component of 2.2 million ounces at almost 7 grams. There are some unique attributes with the U&Me underground resource, though, being a sulphide ore body, which we are managing through our feasibility studies, which are ongoing. And I'll get to these in a little bit more detail further on. So, and at Mount Fisher, grassroots greenfields exploration continues, and we've seen some outstanding high-grade results come from that project recently. In terms of value, underpinned by the large U&Me gold resource, Rox trades on around $18 per resource ounce, so cheap relative to its peers. Rox's strategy, in terms of the assets that we have, they're historical. The U&Me project's a historical producer. We're applying modern mining and exploration technologies to our assets to bring them into production and to grow resources. So we've seen significant resource growth at U&Me. We're advancing our metallurgical test work and well advanced in terms of our studies and options for a restart of production at U&Me. We're also investigating early cash flow opportunities and we'll have a good understanding of the shape that the U&Me development will take in the next couple of months. So just on the vital corporate information on Rox, so Rox trades under the ticker RXL, 169 million shares on issue, a 26-cent share price, so around a $44 million market cap. We're well supported by our major shareholder, Hawke's Point, and we have around 22% institutional ownership. Rox is driven by an experienced board and management team, a very, very capable team that are growing our resource base, are working on commercialising the ounces we have in the ground and then financing those assets, all experienced operators in terms of the management. So just checking in on valuation and where we sit. So this is a bubble chart. I'm sure many of you you've seen many of these before. So this maps the size of resource by company and with the bubble size representing the size of the resource by ounces in the ground. And then on the horizontal axis, we have the grade of that resource, and then on the vertical axis, the value that's been attributed to that, so the price that investors are paying for those ounces in the ground. And what you would normally expect to see in this data is an open pit population at the sort of lower grade end, and then an underground population at the higher grade end. And what's notable for ourselves is that on either metric, Rox stands out as having a large resource at a high grade, but at a relatively low valuation, so a compelling valuation. And we strongly believe that that valuation gap is going to close as we move through to development. And as we move towards development, ESG is obviously a focus, and we're aligning our reporting to the Sustainable Development Goals that I see many others here are doing as well. It's very much a gate opener for financing as we look to debt financing, and also a gate opener for some of the larger institutions as well. So turning to U&Me in a bit more detail, we own a 70% interest in the U&Me gold mine, and we're manager of the joint venture. It's a past producing asset, 670,000 ounces produced at 5.5 grams. It closed in 1997 when the gold price was Australian $4.50 an ounce. There's an existing decline in place to 600 metres below ground, and as I mentioned, there's a 3.2 million ounce resource there waiting to be mined. So just on that resource, we've grown the resource to 3.2 million ounces from 1.2 million ounces a couple of years ago. And we've grown both a near surface resource, so that's a resource from ground surface down to 160 metres below ground level, to 1 million ounces. And also our underground resource, we've grown substantially as well, and that's been from along strike extensions and new discoveries in key high-grade areas. So we've been discovering new ounces at UME for $7 per ounce cost, which compares very favourably to the industry averages. And importantly, we've increased the gold that's known, the gold endowment, in terms of ounces per vertical metre over some really key mining depths. So that goes to the project economics. So just looking at the resource in 3D, this is the UME resource, near surface resource and high-grade underground resource. We're looking to the north. So a few observations. The resource is 2.8 kilometres along strike at surface and extends down to a known depth of just over a kilometre depth. There's also high-grade northerly plunging shoots that you can see represented by the hotter colours, the red colours, which are above 10 gram per tonne shoots plunging to the north. So our focus, given that high-grade underground resource, is on a high-grade underground development with potential for a larger scale open pit expansion and mining in the future. So we're drilling to support that development, and resource growth is likely to continue. So what that looks like in terms of ounces per vertical metre, that resource, on average, the near surface resource is 4,000 ounces per vertical metre between surface and 160 metres depth, and that's because it's got a long strike length of 2.8 kilometres. In the underground portion of the resource, we average 2,900 ounces per vertical metre. But you can see there that in many zones, the ounce per vertical metre number kicks up to above 5,000, which is an exceptional number, and that's reflecting those high-grade shoots that plunge to the north that you saw on the last slide. But the key takeaway from this is really that with this ounce endowment, there's definitely an interesting mine here, and the economics are likely to be very robust. There are two main ore types at UME. There's non-sulphide ore, which is readily extractable via CIL, and then there's sulphide ore. The sulphide, gold associated with sulphide is really gold associated with pyrite and arsenopyrite, and that's easily floatable to a saleable concentrate. So when we look at capital efficient routes to revenue, what we see is that a combined concentrate and gold doré product stream is favourable, particularly in today's cost environment. So in our studies so far, if we were to take the sulphide ore all the way to gold bar by using a pressure oxidation circuit, it would cost 3 times the concentrate route circuit. If we were to take the sulphide ore all the way to gold bar via, say, an Albion process or some other intense oxidation process, it would cost around 2 times the processing circuit for selling a concentrate. Now the trade-off, of course, is if you're selling gold in concentrate, you're not selling gold bars, so you take a hit on the payability. But the good news is that payability for gold in concentrate is very high, particularly if you have a low arsenic, low impurity concentrate like that can be produced from UME. So we see payabilities in the mid-90s, and then a TCRC and a few other charges to come off that. So net, you end up getting about 81 or 82% of the gold price. But certainly in terms of a trade-off against capex, it works well. So the sort of flow sheet that we're looking at for UME is a standard CIL circuit with a sulphide float circuit at the back end. Around 2/3 of our gold will be sulphide concentrate, and 1/3 of the production will be gold doré. The simple process flow there results in concentrate, which is dried and loaded at UME, stacked into 20-foot containers and shipped out of Fremantle. And normal commercial terms here for a gold concentrate sale is that you get 95% of the payment at the Fremantle port. So in terms of, so that's what the development at UME is likely to look like, and in terms of the infrastructure that we've got and the head start that we've got, it's substantial. So we've got granted mining leases, airstrips, basic mine offices, evaporation ponds and dewatering infrastructure in place. So we're able to bring the project rapidly into production once we finalise the financing and make a final investment decision next year. So one of the key things for us to do from here is to convert several key areas of inferred to indicated. We're very confident that the ore is there, but we do need to bring down our drill spacing, particularly in some of the underground areas. So that's a key task for us for the next 6 months. So in terms of updating us on our studies, so we've got a mine design that's very, very detailed. It's probably at feasibility level or DFS level. We've got advanced metallurgical test work. And given the current significant cost pressures being felt across the industry, with our various options and trade-offs that we've considered, we're favouring a low upfront capital, high return operation that can then be scaled up in the future. And we've also, I can't ignore the significant infrastructure like the decline that's in place at UME, which can be used straight away. So in terms of next steps, we've got robust concept level economics. We're very well advanced in terms of our processing design, met test work, underground mine design, and our studies and the results of our studies will be out shortly. We continue to invest in drilling to support resource conversion and resource growth in parallel with our studies, so that's keeping us busy on the ground as well. Just having a look at the Mount Fisher Gold Project, which is earlier stage in UME, but Rox's, it's in Rox's sort of development pipeline or growth pipeline. This project is over in the Mount Fisher belt on the eastern margin of the Yilgarn Craton. We have a very large land position, around 850 square kilometres, and are actively exploring out there for orogenic gold and VMS style mineralisation. So, as I mentioned, the Mount Fisher Greenstone Belt sits out on the eastern margin of the Yilgarn Craton, very remote area, and so the belt is very underexplored due to its remoteness. So this figure is a map of the the Mount Fisher Greenstone Belt, and we hold 80 kilometres of strike in this belt. It is very much underexplored, but a key area that I'd like to highlight is the Dam Damsel corridor, where we've seen some exceptional results recently. So, the Dam Damsel corridor is in the southeast part of this map, and I've then got a blown up image in the middle there. So we're getting results like 18 metres at 7 grams from 69 metres, and in the same area, 13 metres at 7 grams from 45 metres, all going to contribute to a nice resource estimate in that Dam Damsel area in due course. So in terms of upcoming news flow for Rox, we've got the results of the UME scoping study due, well, we're saying this quarter, but it's pretty imminent. There are various aspects of that scoping study that I would characterise as more like a definitive feasibility study. We'll have an update out on our high grade, small but high return open pit project at Grace in this quarter as well. We'll have an update on the global UME resource in this quarter, and then we'll have further metallurgical test work results and concentrate quality aspects announced in the fourth quarter of this year. So lots happening, and please keep an eye out for all of those things. Thank you.
Thanks, Alex. We're right up against time, so I will just ask one quick question from online. So just realistically, how much of a head start does the existing infrastructure give you?
So the decline is developed. It's flooded, so we need to dewater that. The water at UME is hypersaline, but we've got evaporation ponds to pump that water into, and so that's all being managed and thought about in the timelines there. And not having to develop a decline to 600 metres depth, is a huge advantage. In that we only have to pump the water out and rehab and scale and re-equip.
Okay, that's excellent.
Thanks.
Please thank Alex Passmore, Rox Resources. Thanks, Alex.